Welcome to this short video on OTC markets and the Canadian advantage. This video is being brought to you by CanadianPennyStocks.ca. The over-the-counter market is, well, not really a market. There is no common meeting ground, there are very light regulations, and the stocks aren't actually listed on a collective exchange. OTC markets generally work with dealers that have an inventory of stock. They will sell their inventory to buyers, but also to maintain a level of inventory, they will also buy stock from sellers. This generally increases the bid ask spread since there is a dealer that has control over stock. Prices for these stocks are quoted on the OTC bulletin board, commonly abbreviated as OTCBB. You may also see pink sheets, which is another way stocks trading over the counter get quoted. Penny stocks often get a bad name, and some of it is true. There are often pump and dump schemes, and they are mainly perpetrated on the OTC markets. These stocks are very dangerous. You can make money on them, and you can, in fact, make a lot of money on them if you know how to game the gamers, essentially. And oftentimes, for the average retail investor, it's only the market makers and the stock promoters in a lot of these cases that are making money and leaving the retail investor out to dry. So it's really important that you educate yourself if you're going to take this route to invest in these types of companies. They're very, very risky. But if you'd like to watch a movie to see what it's all about, check out Boiler Room. It's a really good movie. It's getting a little old, but it's still pretty good. So we've come to the Canadian advantage and Canadian penny stocks. They trade on an exchange, so they are more heavily regulated in terms of what they can and can't do, and in terms of the filing requirements of these stocks. They trade on the Toronto Stock Exchange Venture Exchange, and oftentimes these companies actually mean business. Whereas on the OTC market, trading in the United States, those companies can be set up purely to suck money out of retail investors by these pump and dump schemes. Like I said, very risky. Companies on the Toronto Stock Exchange Venture Exchange are often companies that are resource based, like oil, gold, diamonds, coal, anything like that. They're often resource based, or they're research based in technology or in biology, chemistry, and these types of things. So these companies are really in their infancy, and they're looking for that big breakthrough. So these companies on the venture exchange really do mean business. They're there to make money. They're also there to make a difference. What their goal is usually to grow their company to such a large stock value so that it can be listed on the main Toronto Exchange, Stock Exchange, or so that it be acquired by one of those larger companies. Either way, it is a great way for an investor in Canadian penny stocks to make money from actual companies, not just frauds like on the OTC. Now, this all being said, this is only an opinion. You want to consult with your financial advisor before you would make any type of financial decision. So this and penny stocks, whether they be in the United States or in Canada, are also very high risk given the early stage that the companies are in. But I still think personally that the companies in Canada do mean business, whereas a lot of the companies on the OTC are really just pump and dumpers that are trying to get your money. So, if you'd like to learn more, I'd invite you to check out the Canadian Penny Stocks blog at CanadianPennyStocks.ca. There's also a Twitter feed that we have. You can check out twitter.com/CDN penny stock. I've also provided the links on this page as well, so you can just click them and check those things out. And I'd really like to hear from you as well. Thanks for watching this video.